Bitcoin price prediction 2035. How Bitcoin Everlight plans to shape cryptocurrency's future. Bitcoin price predictions for 2035 are increasingly becoming part of long-term institutional research, as global financial models extend their outlook further into the next decade. Unlike short-term price forecasts that react to market cycles, interest rate decisions, or regulatory headlines, long-horizon Bitcoin projections focus on structural trends, including adoption rates, monetary policy dynamics, digital scarcity, and Bitcoin's potential role in the global financial system. In recent years, analysts, asset managers, and research firms have begun publishing models that place Bitcoin's long-term valuation well above current levels, with some projections extending beyond $1 million per Bitcoin by 2035. At the same time, the discussion is no longer limited to price alone. Increasing attention is being paid to the infrastructure being built around Bitcoin. Systems designed to improve how Bitcoin is used, transferred, and integrated into broader financial and transactional ecosystems. One project increasingly mentioned in this context is Bitcoin Everlight, which positions itself not as a price-driven initiative, but as transaction-focused infrastructure intended to operate alongside Bitcoin over the long term. This report examines Bitcoin price predictions for 2035, the assumptions behind those forecasts, and how infrastructure projects like Bitcoin Everlight aim to remain relevant regardless of Bitcoin's future price trajectory. Bitcoin price forecasts. For 2035, long-term Bitcoin price forecasts for 2035 vary widely, reflecting the uncertainty inherent in projecting adoption, regulation, and macroeconomic conditions more than a decade into the future. However, despite differing assumptions, most institutional and survey-based models cluster around a relatively narrow valuation range when compared to Bitcoin's historical volatility. Base case institutional estimates. Several institutional frameworks place Bitcoin's price between $1 million and $1.5 million by 2035 under base case assumptions. CF Benchmarks, a crypto index provider whose data is used by regulated financial products, has published probability-weighted models outlining three major scenarios. Base case, approximately $1.42 million per Bitcoin. Bull case, around $2.95 million, assuming Bitcoin captures a significant share of the global store of value market. Bear case, roughly $637,000, reflecting slower adoption and limited institutional integration. These scenarios are not predictions in the traditional sense, but rather modeled outcomes based on adoption curves, capital flows, and long-term demand assumptions. Asset manager and survey-based projections. Other forecasts fall into a similar range. Bitwise Asset Management has modeled Bitcoin prices near $1.3 million by 2035 under long-term adoption scenarios. The Finder.com expert panel, which aggregates predictions from economists and crypto industry professionals, reports an average forecast of approximately $1.02 million. Analyst Timothy Peterson, known for applying network growth models such as Metcalfe's law, estimates Bitcoin could reach around $1.5 million by 2035 if historical adoption trends continue. While methodologies differ, these forecasts share common assumptions regarding scarcity, network growth, and Bitcoin's evolving role as a financial asset. Structural assumptions behind Bitcoin's long-term value. The long-term price targets discussed in these models rely heavily on structural assumptions rather than short-term market dynamics. Market capitalization comparisons. At a Bitcoin price of $1 million, the network's total market capitalization would approach $21 trillion. A figure comparable to current estimates of above-ground gold reserves. This comparison is frequently cited in institutional research, as Bitcoin is often evaluated as a potential digital alternative to gold rather than a traditional currency. Higher-end projections assume Bitcoin captures a meaningful portion of global capital currently allocated to gold, sovereign bonds, or long-term value storage assets. Scarcity and supply dynamics. Bitcoin's fixed supply of 21 million coins remains a central factor in nearly all long-term valuation models. By 2035, more than 99% of Bitcoin's total supply will have been mined. At the same time, block rewards will have undergone multiple halving events, significantly reducing the rate at which new Bitcoin enters circulation. Many long-term models treat this declining issuance as a structural constraint on supply, particularly if demand continues to grow from institutional and sovereign participants. Institutional and sovereign adoption. Higher valuation scenarios typically assume increased institutional and sovereign adoption. Several research models published by firms such as ARK Invest explore the possibility of Bitcoin becoming part of national reserve strategies, long-term institutional balance sheets, pension funds, and sovereign wealth portfolios. While such adoption is not guaranteed, it forms the foundation of more aggressive long-term price scenarios. Shifting focus from price to infrastructure. As Bitcoin matures, analysts and developers are increasingly shifting focus from speculative price movements to infrastructure development. The central question has evolved from how high can Bitcoin's price go to how will Bitcoin be used at scale? This shift has brought renewed attention to projects that aim to improve transaction execution, routing efficiency, and usability, without altering Bitcoin's underlying protocol. Bitcoin Everlight is one such project positioning itself within this broader infrastructure narrative. Where Bitcoin Everlight fits in. Bitcoin Everlight is not designed to influence Bitcoin's price or monetary policy. Instead, the project focuses on transaction routing and execution, operating alongside Bitcoin rather than modifying it. Technical positioning. Everlight functions as a lightweight transaction layer that interacts with Bitcoin while leaving its consensus rules and monetary structure unchanged. Bitcoin remains the settlement layer. Everlight handles routing, node coordination, and rapid transaction confirmation. Optional anchoring allows activity to reference Bitcoin's base layer. This design aims to ensure relevance across a wide range of future price scenarios. Network operations transactions are processed by Everlight nodes rather than Bitcoin full nodes. Development status and independent reviews. Development has focused on making routing behavior observable during early deployment phases. Independent technical walkthroughs have reviewed Everlight's architecture and execution logic. A recent video by Cryptotech Gaming examined node participation mechanics, routing structure confirmation flow during active development audits, and accountability Bitcoin. Everlight has undergone third-party reviews aimed at improving transparency and accountability. SpyWolf Audit, Solid Proof Audit. These reviews examined smart contract logic, execution paths, and deployment structure. In addition, team identity verification has been completed through SpyWolf KYC verification, VitalBlock KYC validation. These steps place identifiable accountability behind operational control, a factor often emphasized by infrastructure-focused crypto projects. BTCL, presale structure and token alignment. The BTCL token has a fixed total supply of 21 billion tokens. Key allocations include 45% for public presale across 20 stages, 20% for node rewards, 15% for liquidity, 10% for team tokens, subject to a 12-month cliff and 24-month vesting, 10% for ecosystem development and treasury. The presale is currently in Stage 2, with BTCL priced at $0.0010, progressing toward a final stage price of $0.0110. Token distribution includes 20% unlocked at token generation, 80% released linearly over 6 to 9 months. This structure is designed to align node participation incentives with long-term network stability. Bitcoin price predictions for 2035 reflect growing confidence in Bitcoin's long-term relevance, even as uncertainty remains around adoption pace and regulatory evolution. While projections ranging from $1 million to $3 million dominate institutional research, infrastructure development is increasingly viewed as equally critical to Bitcoin's future. Projects like Bitcoin Everlight represent a shift toward execution-focused systems designed to operate regardless of price outcomes. As Bitcoin continues to mature, the interaction between long-term valuation, adoption, and supporting infrastructure may ultimately define its role in the global financial system by 2035 and beyond.